Do you have a large income that puts you into the top 3% of all income earners in the United States? If so, then it's especially important for you to have a good tax strategy in place that minimizes your overall tax obligations. The simple fact is that for many big earners, taxes are their largest annual expense. In fact, if your income is over $539,000 for the tax year of 2022, then you can expect to pay a whopping 37% in federal income taxes to the IRS. That's around $200,000 in federal taxes. You'll also have to pay state income taxes on top of that. For the states that do have state income taxes, which is most of them, taxes range from 1 to 13.5%. What this means is that if you are a big earner, then you can expect to pay anywhere from 40 to 50% on your taxes every year. What's up, guys? Welcome back to Taxes Made Simple. I'm your host, Karlton Dennis, and in today's video, I'm going to discuss with you exactly how many wealthy people and top earners reduce their taxes to zero. Once you understand the mindset of the rich, as well as the tax strategies they're leveraging, you can start using them to reduce your own tax obligations and keep more of your hard-earned money in your pocket. So let's get started. All right, guys, real estate investing is one of the most popular strategies that is used by the wealthy to reduce their taxes to zero. You probably already understand that investing in rental properties can help you generate cash flow or capital gains over long periods of time. However, you might be unaware of the incredible tax benefits that you can receive when you're investing in real estate that can help you defer taxes long term. As a big earner, you need to know that if you take some of your hard-earned money and invest it into rental properties instead of letting it sit in the bank account, this can actually dramatically reduce your overall tax burden at the end of the year if done properly. Now, why is this the case with real estate? Well, it's because the government allows you to get a certain tax break and write-offs by being a real estate investor. That's right, taxpayer. There are special tax benefits for real estate investors, just like there are special tax benefits for business owners. Therefore, if you can become a real estate investor too, then you also can enjoy some of these same benefits and watch your annual tax obligations dwindle as a result. So, what are these special tax benefits that real estate investors have? Let's discuss them. Depreciation. Depreciation is one of the single most important tax benefits real estate investors have. Depreciation refers to the wear and tear that a rental property will gradually experience over time. For example, the wiring in a rental property might become faulty. The roof might need to be replaced. The floors might need to be redone, and new appliances might need to be installed. The IRS is aware that rental properties tend to require upkeep and maintenance costs over time to keep the property in good standing condition. Therefore, it allows real estate investors to deduct the entire value of the property in depreciation costs over the period of 27.5 years for rental properties. To understand how this works, imagine that you invested in a rental property that is worth $1 million. According to the IRS's rules, you would be able to deduct $36,363 per year for that property as a depreciation expense over the course of 27.5 years. This is because you'd be able to divide 1 million by 27.5, which would give you $36,363. What is nice about this benefit is that you can access it without having to pay $1 million in cash for the property up front. You can just put a down payment on the property and use debt to fund the rest of the property. Once you own it, you can start writing off depreciation expenses immediately. This is where the fun really begins for high income earners. Let's talk about some other deductions that real estate investors get to receive. In addition to being able to deduct depreciation costs, real estate investors are also able to deduct many other expenses related to their real estate investment. These deductions include interest on loans used to purchase the actual property. It also includes repairs and renovations, travel associated with your real estate investment activity, contractors or other employee expenses, as well as advertising and marketing costs, as well as professional or legal services, so on and so forth. As you can see, there is an extensive amount of deductions that real estate investors can qualify for. Every time you qualify for a real estate investing deduction, it lowers your overall income. Now, let's talk about FICA taxes. There are a ton of benefits of FICA. FICA taxes are the taxes that are taken out of your earned income to pay for Social Security and Medicare. These taxes are 15.3% of your earned income. If you're employed by an employer, then you split these taxes with your employer. However, if you're self-employed, then you will be responsible for paying them all by yourself. The cool and fascinating factor about real estate is rental income from your rental properties is not subject to FICA taxes. This is an incredible tax break for real estate investors and a part of the reason why real estate income is so desirable. This means that you can save between 7.65% and 15.3% in FICA taxes for your rental income every year. The rental income is still subject to ordinary taxes. However, with the amount of write-offs you're receiving as a real estate investor, you never really see any taxes come April 15th due to all the depreciation. So, how do we get to that 0%? At this point, you're probably well aware that there are many incredible tax breaks for real estate investors, but how do real estate investors actually get down to 0%? How do big earners get down to 0%? Well, here's how. Taxes can get down to zero for real estate investors when the deductions that they qualify for surpass the amount of annual rental income that a property generates per year. When this happens, the real estate investor gets to enjoy what is known as tax-free cash flow. Tax-free cash flow sounds amazing, and I want to make sure that we are understanding it correctly. The truth is it's just as amazing as it sounds. That is why so many high net worth individuals and wealthy families use this strategy to grow and protect their wealth and reduce their taxes over time. And that's also why they seek tax professionals who can guide them through their rental purchases. To illustrate how this works, let's go back to the example of the rental property valued at $1 million that we were just discussing before. We already figured out that we could qualify for a depreciation deduction of $36,363 per year. So here's our property that we purchased for $1 million. We know that we're able to write off this property over the course of 27.5 years. This was the first example that we discussed where we divided 1 million by 27.5 to get a depreciation deduction of $36,363. But if we have other expenses of $20,000, this will bring our total expenses to $56,363. Now, as you can tell, that this is a pretty big number, so we have to factor in what is our cash flow on the property. If we received rental income in the year of $50,000, we would be at an effective loss of $6,363. But what is causing this effective loss is truly the depreciation. This part is what really makes real estate enticing, because real estate can lead to tax-free cash flow due to depreciation. So as long as the cash flow of the property was less than $56,363, our tax obligations would be zero. So for example, let's say the property had an annual cash flow or rental income of $50,000 like I'm showing. In this case, the IRS would actually consider the property to have a loss of $6,363 per year. Therefore, no taxes would be owed on the property. So many big earners invest in enough real estate to the point where their tax obligations can dwindle down to $0. The more of your earned income you can put into real estate investments, the lower your tax obligations will be in most cases. Some high net worth individuals even transition entirely to real estate at some point in their career in order to get much more benefits from real estate investing and much more tax breaks than they were receiving from their earned income. The big picture is now that we understand how deductions work for real estate investments, let's talk about the bigger picture here. The bottom line is that you can save an enormous amount of money in taxes simply by investing in real estate. Depreciation deductions are largely to thank for this. However, the IRS does expect you to repay the depreciation deductions you take if you were to sell the property in the future. This is called depreciation recapture. But there is a way to avoid depreciation recapture taxes as well. You can avoid depreciation recapture by doing what's called a 1031 exchange. A 1031 exchange is when you take the proceeds of your real estate sale and invest them into another like-kind property within 6 months. If you do this, you can defer the depreciation recapture taxes and also the capital gains taxes that you would have otherwise had to pay. Many real estate investors use this strategy to defer taxes until the day they die, and it's perfectly legal to do so. What this means is that you can keep using real estate to reduce your taxes for decades. As you do this, The properties will also tend to appreciate in value, meaning you can raise a lot of money, raise rents, and also borrow from the appreciation of the property in your lifetime. Now, to conclude, if you're a top 3% earner, and if you're making hundreds of thousands, even millions of dollars per year, then you probably want to keep as much of that hard-earned money as possible, right? In this case, then you should strongly consider investing into rental real estate. Not only can it help you avoid taxes on your rental income, it can help you avoid taxes on your ordinary and 1099 income as well. If you need more clarity about the tax rules for real estate investors, then please feel free to get in touch with my office by clicking on the link that we have below this description. My office is happy to help you, and we work with tons of high net worth individuals who are excited to get into real estate as a tax shelter and to grow long-term wealth. That's all for this video, guys. I really hope that you enjoyed it. And if you're somebody that's taking it upon yourself to take control of your finances, go ahead and click on the link below to download the Tax-Free Living Bundle. This bundle is a list of strategies that we put together for you that'll help you get started on your journey to building wealth. I look forward to seeing you in the next video. Thank you so much.